There was a lot of fear surrounding Solana and the unlock of nearly 29 million tokens coming up this week, but that has been delayed. Let's talk about what this means for the crypto market. How's it going, everyone? My name is Jake with Trade Confident. Today, as I said, I'm going to be talking about Solana and the delay in the unlock of the nearly 29 million tokens, the controversy around this, and what this means for crypto in the short term. Let's not waste any time and jump right into it. Solana unlock postponed, but is it enough to save SOL from declining? The SOL token started falling on November 6th, and while this might have been written off as regular market movement at first, the decline has continued for more than 2 days. As the decline continued, several theories were proposed, but the connection to FTX's impending insolvency seemed to hold. Up to this point, the Solana team had not made any sort of public comment. Co-founder Anatoly Yakovenko responded briefly on Twitter, stating that Solana did not hold any FTX assets. He went on to say that the company was incorporated in the United States, maybe dropping a hint about compliance with the rules, and that it had sufficient cash reserves to keep operating for another 30 months as it had a lean staff. Hiobi Research reported that FTX, via Alameda, made direct investments in several companies, one of which being Solana. Yakovenko's brief statement may have been insufficient because it prompted more questions than it answered. It is probable that the recent sell-off and downward trend of the Solana token were motivated by concerns over a possible dump of the SOL tokens claiming to be held by FTX. However, on November 9th, there were numerous reports that staked Solana would soon be released, and thus the downward trend continued. The Solana unlock had been scheduled on November 10th, but the Solana Foundation said in a recent update that the date had been moved. This amounts to about 5.4% of the entire supply, or 28.5 million SOL from 250 accounts that were scheduled to be unstaked at the conclusion of Epoch 370, which has passed, by the way. The Solana, however, has been restaked and unlocking has been delayed, and the keyword here is delayed. Now, this is a fairly controversial move. On one hand, not flooding the market with nearly 29 million tokens stopped much further moves down for Solana. On the other hand, though, it proved that Solana, yet again, is a highly centralized blockchain. This essentially means that there is a governing organization or foundation, in this case, the Solana Foundation, that essentially controls how the blockchain operates. This goes against the main principles that cryptocurrency was created on, and that no central organization should have control over the money. So that is the controversy here. On one hand, it's really appreciated that they didn't destroy Solana by allowing 29 million tokens to flood the market. However, it further proved that Solana is not decentralized. With that, let me know down in the comments what you think. I'd really appreciate your guys' opinion on this. I'd love to hear it. With that, let's get into the technical analysis. Right now, I'm looking at Solana USD on the TC top and bottom finder metric on the TradeConfident.io website. If you want to get access to these metrics and many more benefits with the Trade Confident membership, be sure to click the membership link below in the description. Now, this chart was updated this morning on November 11th here, and you can see that the price has pushed past the green support line into a green liquidity pool, and the TC market reversal is printing green bars here. Now, this typically indicates a big move up is incoming, but we have to pay attention to fundamentals in this case. We have to remember that the dump of nearly 29 million tokens is only delayed. It's still going to happen at some point, and we should be expecting that and be ready for it. With that, I personally would hesitate, not financial advice, but I personally would hesitate to purchase Solana at this price. We could still see a move up, always that possibility, but I feel like the risk for this particular token is too high. Personally, I also don't like Solana. That's just my personal opinion. I don't like the centralization aspect of it and how much control the Solana Foundation has over the blockchain itself. But again, that's personal opinions, not financial advice. If you like Solana, this could be a good price, but be ready for Solana to dump after the 29 million tokens flood the market again. Checking out the 4-hour time frame here for Solana USD, we have now created a new resistance level at $18.18 here. We are moving down as we've been rejected at that level. As of now, the current price is $16.29, and this is the lowest price that we can find on pretty much anywhere in the history of Solana. You could scroll back as far as you want here, but regardless of the exchange, we do not see a price that is lower than it currently is, with the exception of basically yesterday when the price fell as far as $12.19. So with that, $12.19 is our only actual structure support here. If the price falls below this, we have to begin relying on quarters theory levels to begin finding new structure supports. This means essentially $10, $7.50, $5, $2.50, and onward are the new structure supports. And I have to clarify, it's not actually a structure support. There is no structures that support that. On Solana, you cannot find a price, no matter how far back you go. The price structure on most charts on TradingView ends before we see the price fall back to where the levels it is right now. This is why we need to rely on quarters theory if the price breaks down below this structure support, the only structure support at $12.19. Now the TC top and bottom finder performed really well here. We got strong sell signals right before the huge drop. We got a buy signal right towards the bottom. Trend exhaustion and price versus well money flow did see multiple bottoms here as Solana absolutely crashed. Now it's really important to note here that indicators like these, or any indicators for that matter, rely on technical analysis. They look at structure supports. They look at a lot of different types of structures in the price to look for the next moves. So when fundamentals like the FTX crash and news that there's going to be 29 million coins flooding the market comes in, indicators have a very difficult time timing this. While this was a great call, this was independent of the FTX crash, which is what caused this downfall in the first place. And with that, it's very important to note that. This is why when there's huge crashes in the market, you have to use the 1-day time frame or even higher. On Bitcoin with longer price history, the weekly time frame is actually better. In this case, you can see the trend exhaustion and price versus well money flow are just now bottoming out. Right here is where we're seeing the absolute bottom on these indicators. If you guys remember from the trading tutorial using our top 3 indicators, you know that the price pushing into a green liquidity zone along with trend exhaustion and price versus well money flow being low on their charts typically indicates a good buying point. And if you had purchased within these candles, you would have been in profit right now. But again, fundamentals say that is actually a very risky maneuver right now to trade Solana. Of course you can, but either way, trading or not is at your own risk, and you should do your own research before deciding. Right now, I'm just showing you what the trend exhaustion price versus well money flow and the TC top and bottom finder are showing you, and it's very important to keep in mind that you should always use a mixture between fundamental and technical analysis here. And right now, I believe that fundamentals kind of take the cake. However, trend exhaustion and price versus well money flow have been absolutely crucial in timing the tops and bottoms of this market. The TC top and bottom finder is absolutely killing it in a ranging market when the prices are moving sideways. You can see perfect calls here with the buys and sells here at the tops and bottoms of the market. But again, fundamentals cannot be predicted using technical analysis. That's just not how it works. No indicators could have called this top because literally nobody knew that the FTX crash was going to happen until like a day or two before it did. And at that point, it was too late. So if you want to get access to these indicators that are helping us predict the tops and bottoms as they happen, despite the crazy fundamentals that are going on, be sure to click the link in the description below. Our members are making crazy amounts of money. And again, you can see how the trend exhaustion price versus well money flow helped us predict the bottom here on the daily time frame. Again, if you want to get access, click the link in the description below and it'll bring you to this page right here. In order to get the best possible deal using the trend exhaustion price versus well money flow and TC top and bottom finder, this is how you're going to get the best deal possible. You're going to snag the bundle pack first. This will give you the price versus well money flow, trend exhaustion, along with 7 other trading indicators here. And it'll give you a $400 off coupon for the TC top and bottom finder and TC market reversal charts. No matter what you purchase, you'll get lifetime access for a one-time payment and full dedicated email support. So if you ever have any questions, send us an email at betradeconfident@gmail.com and we'll be happy to get back to you as soon as possible. Don't take it from us though. Our customers are making crazy money. All 3 of these people, everyone on this list has already made back their money after purchasing the indicators and then some. This person made $950 in one day, $4,300 in just a week, $500, $5,200, $4,300 in just their first 3 trades. Absolutely incredible. So again, if you want to get access to these indicators, be sure to click the link in the description below. With that, the Solana Foundation pulled a very controversial move today, delaying the release of 29 million tokens on the Solana blockchain, stopping a flood in the market of Solana after a major crash had already happened. This did likely save the Solana blockchain, but at the same time, it proves that the chain is not decentralized and goes against the principles of cryptocurrency itself. So again, let me know down in the comments what you think. If you enjoyed this video, please like and subscribe for more crypto content, education, and analysis every single weekday. With that, trade safe, trade confident, and I'll see you in the next video.